Dear guests, please take your seats as we are starting our signatures panel, Leaders Kickoff on Essential Risks and Silver Bullets. Please welcome our moderator, Andrea Badiola Mateos, Chief Commercial Officer at Finance Magnates Group. Andrea, the stage is yours.
Thank you, Dushka. Thank you very much. Thank you, everyone, for joining us at the very first Leaders Panel in FMPS this year. It's our very first event in Australia and in the Pacific region. We're very proud of it, and we're very happy for all of you to be here sharing this with us. We have an amazing panel with us that is going to be able to give us insights on the Pacific region, particularly in Australia. So I'm going to allow each of them to introduce themselves briefly, because nobody can do it better than them. So maybe Alex, you want to start?
Hi, Alex. Welcome to Sydney, and great to have Finance Magnates coming to Sydney. I head up our business here in APAC. Finalto is a B2B broker. We specialise in providing liquidity to the retail market.
Thank you, Alex. Joe?
Hi, I'm Jody, Chairman of ATFX. ATFX cover both retail and institutional at the same time, and institutional arm called ATFX Connect, headquartered in London, and coverage global brokerage, institutional business. Yeah, thank you.
Thank you, Joe. Andrew?
My name is Andrea Ralich. I am the CEO and co-founder of oneZero Financial Systems. oneZero is a technology provider providing risk aggregation, price distribution technology to a global array of brokers, banks, and buy-side institutions.
Thanks, Gavin.
My name is Gavin White. I'm the Group CEO of 26 Degrees Global Markets, formerly Invast. We're a prime services provider to hedge funds, high-frequency traders, family offices, and broker-dealers around the world. We have over 100 staff in 4 different locations around the world. We're proud to be here, and thanks very much, Finance Magnates, for bringing the expo down to Sydney.
Thank you, Gavin.
Morning, everyone. David Jenkins. I'm CTO at Pepperstone. We're a global CFD broker. We have offices in about 7 locations globally, and we run a large technology contingent where we build an in-house trading platform of our own, but we also partner with some leading platforms out there to distribute our products.
Thank you all. So we're going to open up the conversation with a very exciting topic, which is regulation, because Asia-Pacific region has a very diverse landscape on regulation. So how do all of you manage the diverse regulatory landscape when it comes to APAC? Who wants to start? David, I saw you.
Yeah, it's an interesting topic. I really love this topic because I guess one of my anecdotes would be, I feel like this topic is something that comes around for many, many years, and we're always expecting some regulatory harmony to come out of globally diverse markets which have very different geographies and domestic issues and other things. So in some ways I feel like regulatory harmony is just not coming, and actually what you should do is really optimize for change, and if you can do that, then your competitive advantage is actually your ability to optimize for change, not actually expecting regulatory harmony. So I don't know if anyone else wants to chime in on that.
I think that sounds pretty smart, a pretty smart strategic play. For us, it's a little bit different because we only deal with institutional wholesale clients. We don't deal directly with retail. So the changes in the regulations and the differences in the regulations across jurisdictions is less of an impact to us and more to our clients.
Joe?
Yep. ATFX being regulated globally for 8 main regulator. So we are pretty familiar with the regulator and sort of like comfortable because not only by experience, but we got different channels to work with the regulator, being the consultation group, etc., etc. So I think of course, it's always a good thing for industry to be well regulated. Even now, as you can see in Asia Pacific, some offshore entity, the regulation there is improving, so catching up the major stream. So for us, as we are regulated globally, so we have a full scope of different variety of regulation, which can sort of customize those clients for no matter retail or institutional needs, which I think it makes us, it also helps us in another way to give clients much more confidence for their money with us. Yeah.
Thank you, Joe. Anything, Andrew?
You'd think that the tech guy on the panel gets to say like, oh, I have the easiest job because we're not a regulated entity, but the reality is with 250 banks, brokers, and clients, many of which are, my co-panelists here, we have to deal with the superset of every regulation and be a facilitator of the data and technology and execution standards that adhere to all of the different global regulatory standards. And that's a challenge that we've been facing since day one of the business. I've been coming to Finance Magnates events for 15 years since we started the company, and regulation was a scary topic. And now I think it's a validating aspect of this industry to continue to evolve, be a comfortable place and safe place for clients to run their business. And attacking challenges and fragmentation is the name of the game in liquidity provisioning and aggregation in this space. We have hundreds of different fixed liquidity endpoints that we normalize. We look at regulation the same way. It's a fragmentation problem, slightly different standards that we need to normalize and aggregate. And I think the role of tech providers here is to not only build an ecosystem of liquidity and access to markets, but also an ecosystem that we've nourished of reg tech providers. And that all comes from data at the end of the day. We move approximately 4 terabytes of client data a day into the cloud, executions, quotes, and trades, and open that up to the market to facilitate a variety of different regulatory reporting standards.
I'm glad that you brought that up, because actually when it comes to regulation, reporting is a big part of it. And that was my next question, to be very honest, because the requirements for reporting are changing just now on October 21st this year, if I'm not mistaken, which applies to OTC overhaul of securities here in Australia. What kind of measures are your companies taking in regards to these new activities? Is it impacting your businesses in any way? Are you taking any steps towards it? Maybe, Andrew, you have developed something to help them with this reporting?
We have a data output from our data source platform that I lovingly call the Rosetta Stone. It is the set of comprehensive trade data and columns that can be permutated, adapted, and used to adhere to ASIC, MAS, FCA, any regulatory standard under the sun. And so our role is to continue to adapt that framework, but we're not the end reporter. There's a vibrant ecosystem of reg tech providers, there's legal and compliance teams that are clients, so it's a partnership game for us. We've always operated an open ecosystem. We want to be the experts at what we do, but that Rosetta Stone and providing scale real-time execution on best execution standards, and then outputting that in real time for clients to be able to use is the key role that we play in this ecosystem.
Right. Alex?
I think on the reporting, it's probably the most, it's part of the business that's less fragmented than anything else. So maybe that's the start of the regulators seeing the same sort of data and maybe talking to each other more often, because in the trade reporting that we're looking at now, MAS is very close to ASIC. ASIC's getting very close to FCA. So it's actually about the only place where there's not much change, where the regulation, money rules, etc. around the main part of the business is very fragmented.
David?
I just wanted to add that, this is regulatory fragmentation is something that, we all live and breathe and something we're all developing solutions around. So the financial reporting part of it is certainly complicated, and there are vendors out there that will do that for you if you've got a clean store that you can actually, outsource some of that complexity. I think from our point of view, a lot of the standards around things like resilience and governance are all extremely fragmented as well. And so what we're trying to do is develop our own baseline standard, because there's no standard out there that really fits us. And as a result, do you align to ISO? Do you align to SOC 2? What's your standard? So in the end, we've kind of given up trying to align to one and said, okay, we're going to create our own. And then we're going to use AI to map each of the different regulations and try to fit them in, so that when we're trying to prioritize, if somebody says, okay, you need to do something, it's like, well, if I move this bit, I'm going to affect 5 regulations, not 1. Because if you try and build from the ground up per regulation, it becomes like a Frankenstein, where things are different for different reasons to different people, but you need something to say, well, that's my baseline standard, and that's how my impact is measured. So it's something, I think it's a secret sauce. I can't think of anything worse than a globally regulated harmony where we all move in sync and we all have to do things at the same time, and it requires a global consensus to do something. Like, it sounds a little bit nightmarish to me, actually.
Gavin, yeah.
With us, we've been involved in trade reporting for the last decade for our clients, delegated trade reporting. So we knew that that was a necessity for us to be as expert as we could in that space. We utilised data source that Andrea was talking about from oneZero to extract all the data that we need in order to do the reporting. But we've rather than go to a vendor, a separate vendor, we've done that development in-house ourselves over the last decade. To be honest, you know, I say this, but I didn't build it. It didn't seem like it was that hard to build. So I shouldn't say that, but we still do a lot of delegated reporting for our clients and that sort of thing. And you know, we're well and truly prepared for the changes. It's something that I think it'll be more of an impact to the industry and the business as it starts to tighten going forward. They're sort of incremental, some of the changes. So.
Well, one note I'd just make on the back of that, because we talk a lot about regulation with trade reporting and outputs, and we try to look ahead and be innovators for our clients and see kind of a little bit down the road what's coming next. I think one aspect that's pervasive across our whole client base is very few of our clients have a single regulation or a single entity. And we've been doing a lot of investment getting ahead of this for our customers in not necessarily the transactions between your takers or your end clients or your LPs, but being able to catalog inter-entity transfers. You know, the day of, you know, the New York desk wakes up and we just, you know, give them the log on to the system and it's there, booking entity-to-entity transactions. We've recently put out our portfolios framework, and that's all about being able to represent risk in different pools, properly ledger and transact between your different entities and subsidiaries in order to understand what risk is and put out that compliance output, not just about you to your retail customer or you to your B2B customer, but in between your different entities. I think the standards are going to raise there in terms of regulators' desire to make sure if you're operating an MTF here and a principal risk taker here, you need to make sure you're booking your transactions properly, and it can't all just be fudge math at the end. And our role in that is providing the tech to do it, and that's an area that we see a lot of innovation, a lot of change happening with our clients.
I'm guessing that AI is one of the tools that you guys are actually using for these kind of things, and probably more, but tech-related, tech-wise, there is a lot of innovations that are happening. And within Australia, I was inquiring a little bit before coming for FMPS and everything, talking over the past few months with many of the actors in Australia, and it seems that there is a growing community of startup techs related to the finance industry in Sydney, but there is also Melbourne that it seems to be developing in that area. I mean, you guys are from here. Could you fill in the gaps a little bit about the technology, what's booming, how are you using the AI, how is it in Australia?
Well, like Andrew mentioned, reporting tech or regulation tech, one thing we put quite a lot of resources is cross-entity. Definitely the regulator in South Africa is very different with the one in London. The regulator in Mauritius is very different with the Australia one. So how to do cross-entity, the tech, including the automation, is one of the things that we put quite a lot of resources, make it like less manpower, so that we can focus on more like business development side. For AI, I'm sure it could help as well, but now I think AI is very helpful for us to do the risk management, not only for us, but for the client as well. So we can, for example, we are working with Pepperstone, which is like an AI algorithm for risk management tools, which can provide to our clients to segmentate their risk level for different clients, and which is always be the key for remember institutional brokers or retail brokers, or even like family office or hedge funds. So not to mention about the auto routing of the ticketing system, how to do the cross-server efficiency, etc., etc. So it definitely like one of the major area that we need to invest and implement to our operation.
Thank you, Joe.
I
David?
think Andrea had a really good point about the multi-entity thing. Like, it's actually something that I also wanted to reinforce. I mean, if the regulator doesn't understand you, then you can't expect them to ask the right questions, you know, and that's something that we feel every day. If you don't actually have boundaries around your entities so regulators know where those boundaries start and stop, then what happens is total confusion, and they're asking questions which are not questions that they need to ask because you haven't actually got the right agreements in place. So I just wanted to reinforce that point. It's very important that they understand you and therefore can ask the questions appropriately of you.
And which are the technologies that you're most excited about that are coming up?
oneZeros. I think
Non-biased, fully non-biased.
I've been saying this for a few years, and I'll repeat it in a controversial sense. I think most AI endeavors going on in the world and in our space are crap and vaporware and a marketing term. I think for every 100 AI startups or innovative marketing trends you see on LinkedIn, there's maybe one actually relevant proprietary scale data set that you can derive insights from.
And while we've still got arms coming out of heads in photos, I'm not going to use it for anything too seriously.
It's not ready yet. It's certainly not a reg tech problem. I think risk management can benefit from AI, but regulatory tech is putting columns in a database, booking the right transactions in the right way, and I'd love to see a panel of regulators and hearing what they're doing with AI because they have access to everybody's data in the room. That's where you have
If you're
scale.
listening.
like where is machine readable regulations? I thought we were going to get those about maybe 10 years ago.
But one thing, like besides AI, to be honest, like blockchain is a very good technology that provides transparency of like clean record, efficiency of reporting. I think that part helped us as well. We are trying to do one thing is like we have been doing actually in last year, that for those client trading history or records, or even like how to identify this is our client or not, is his partner or not, we can put those like their data through a portal via blockchain, which is not changeable. You know, it's not like you can manipulate. Then it provides a great transparency to our clients that this is the data that we're having, instead of like we are putting modify a little bit things in here. So I think blockchain is one thing you will definitely improve our execution, operation efficiency in our industry.
I think at the same time, on the topic of the panel being existential risks and things that I think are kind of crypto, is a challenging area for this industry as well too. Settling a transaction to the blockchain is incredibly innovative. It's also like taking a T+2 traditional FX contract and doing the SWIFT transfer at T instant and the time to settle the currencies. And there's a lot that goes on there. There's a lot in AML and KYC land that we need to think about as we utilize technologies that disintermediate aspects of the banking system. We do not take crypto payments at oneZero because to wire money to us, you have to send it to a US bank, and that provides a certain level of validation. We're not dealing with anybody who's sanctioned. We're not dealing with anybody who's red flagged. Receiving payments in crypto, deposits, settling to the blockchain is incredibly innovative. But we have to sometimes ask, like, banking bureaucracy and the speed that system exists in some ways for a reason. It slows things down. It doesn't allow you to bypass sanctions and other things and protects your company. So though that's an innovative technology, it also carries, I think, existential risk in this space. And as we see clients moving from, I'm offering a crypto CFD to I'm going to settle on the blockchain and take deposits from clients, that has scary implications that we have to be careful about.
Yeah, that topic in particular, that kind of worms that is payments that you're opening up, it's a very exciting topic, and particularly in Australia and in the Pacific region. But we have a panel this afternoon on that I will be moderating as well, that we're going to be talking about all of those topics because it's very exciting, and there is a lot of innovation and technology happening on that affects all of you and all of us actually around the world. And in some cases there is considerations like the ones you're mentioning that need to be taken into account. Yeah. David, you wanted to say something?
Oh, I was just going to talk about existential risks and that whole, you're touching on automation there with things like smart contracts that you can bake in some of this settlement logic into those things. I think There was a talk by Eric Schmidt, who you probably all know, ex-Google. They keep trying to pull it down because he was very disparaging of Google, but it's actually fascinating. And what he was saying was that every single person on the planet can have an infinite number of programmers to do whatever they like within about 10 years. So they can scale developing software and developing logic. And that, I think, is somewhat of an existential risk, because what gets baked into this stuff that people are now able to churn out much quicker and faster, I think, is both exciting and scary. I mean, there's a big scalability potential there, but at the same time, I mean, who's checking what's going into these things and what's being generated?
And speaking of existential risks, ESG is one of the trends that are taking place in the last few years. I've been trying to talk about it for quite a few years in panels, but it's only picking up now in the fintech industry. How is sustainability being added to your company's policies, to your products? How is it, what are the specific things that Asia Pacific region is actually taking into consideration when it comes to ESG? Gavin?
On our board, we have a ESG policy that we follow, we put together and follow. It is mainly sort of focused because of personal interests and that sort of thing. We've decided to focus our efforts in that realm, and it's focused on social causes, some of the things that we're looking at there. Apart from ensuring that our overall governance and the way in which we run the company sort of abides by those overall principles of ESG. We've got a particular interest in promoting certain social causes and making sure that the company is respectful of those causes. So it's an ESG policy with a bit of a lean towards those things.
So it's more cultural within the company towards the employees. How are the rest of you, Alex?
We're very similar to Gavin. It's the social network, the community network. We look at it around helping the community, going out there and doing things around the world. We do have an ESG policy, but it's always evolving around that social part. But if you look further down the ESG, it's coming to like our vendors, like say Andrea, then we have to go and investigate his ESG policy. So, we're a bit different to, say, the manufacturing industry where you have to go check the suppliers. I think we're going to be very lucky, but we only have to go down one or two layers to really check the ESG value chain, if we call it that.
Yeah, we do a lot of work in this. I'm very proud of oneZero as an organization on the S&G side of this. Diversity, inclusion has come naturally to the organization over the years. I think we've promoted that. I think we work with good partners who are there. Governance-wise, I think we run a very clean shop. More of an existential topic than a risk to this industry, but high-frequency finance is never going to get a great score on E. Everywhere else, if you turn a blind eye to my Equinix data center, we have a LEED certified building. We don't use a lot of paper, and we use a lot of electricity in this room, in our data centers, and we cycle hardware a lot. Keeping up with the Joneses of Moore's Law and the pace of markets that exist throughout the industry, we're cycling server level hardware, our whole data center, every 3 years, and that technology just goes to the side because you have to be on the latest and greatest. It's not the best for the environment. It's a challenge that we face as an industry, and on a personal basis, I don't think there's a way to unwind that, but we look within myself, my co-founder, and our organization to find ways to give back alongside what we do in finance and the necessity of the environmental impact of this. And I think as an industry, we should be conscientious of that.
What we do most, very true, our industry, we focus more on social give back. Especially we have approximately 23 countries. We got offices locally. So we do a lot of charity things. We literally, I think last year we do more than 50 to 60 charity events locally for those unprivileged family or kids. And one of the things we do proud is the Duke of Edinburgh charity golf event that we partner with the royal family in London, in UK, which we've been doing that 6 years already consecutively, raising I think more than $7 million for the charity. This is Andrew mentioned, technology-wise, we have to be updated, but what we can do is to give back to the society. Yeah, this is what we try to do.
Yeah.
I guess my take is slightly different direction, but certainly Pepperstone as a company is doing as much as we can on ESG. I mean, we calculated the cost of an inefficient website and how much carbon that burns. We ran through a FinOps process where we just switch stuff off. Like, I don't know how many people here in public cloud where people just don't switch things off. So this sort of stuff, and modern slavery, we have all those policies. But I think my take on ESG is more from an investment perspective. I think the screening tools for traders are getting better and better, and I've seen improvements recently in the ability to be a responsible investor, and I'm just still not sure how much traders are actually using those things, because the data is really complicated and the refresh cycle of the data makes it quite unreliable. So if you're trading intraday, you're trading high frequency, I mean, some of this stuff gets reported quarterly. So is it actually even helpful? So I'm yet to see whether ESG is going to make it in a firm way into the investment cycle for the retail investor. I can see it in institutional because the screening tools are there, especially when you're long-only super funds, pension funds, people like that. But for people who are day trading, people who are trading over shorter time intervals, I haven't yet seen the screeners really tackle that market. I mean, mostly they're technical analysis and trends, but I haven't seen the ESG into it.
Yeah, that's very interesting because in South Africa, when we were back in May at FMPS, one of the questions that was being discussed with traders on site, surprisingly, was actually ESG and the environmental impact of everything. They also have like power cut and a lot of different technological challenges. But it is coming to mind of the traders every day more in terms of when they want to go long and it's not for day trading, for example, what are they going to invest in? What kind of assets and products are they going to be buying at book rate? It will be highly dependent on the impact that these products are having in the environment or socially. What are the politics behind it? They don't want to support specific causes or companies, etc. So I do see a shift. I think it's, like you said, it's more on the institutional level, but it's also getting to the retail side, and it will probably come at different times in different regions.
Yeah, sorry, Dave. Sorry. I think in non-leveraged, sort of more medium-term to long-term trading, so in equities trading, that is becoming a theme without a doubt, and particularly amongst the younger generation. They seem to be much more in tune and sensitive to those topics. But the predominant instrument that people trade in this industry is a leveraged CFD, which is, most appropriate for a short-term trading. So yeah, in that regard, like medium to long-term investment trends are unlikely to show up early in that. What we will see, though, I think, is a bigger focus in the CFD industry amongst the retail on event-type trading, on that very short term and placing themselves for an event. And we've just released, the guys on the panel know this, we've just released a product, pairs trading, where you can trade any stock against any other stock, or any instrument against, so you can trade Ford against oil, or gold against a bank, gold against oil. Anything that your retail clients want to trade something against, we can set it up immediately. What that does is you can start to build things that are non-correlated, so when an event happens, they both move in opposite directions. So that gives essentially almost like a sense of leverage to what, this instrument. That sort of thing, I think, is the future for our industry. That's very short term.
Yeah, I think our industry will be signals based. I mean, I've seen a lot of screeners that can screen vast amounts of data and narrow down a portfolio to be, I don't want to be in terrorism, I don't want to be in certain industries. But when it comes to signals like climate shocks, political shocks, things like that, which do have short-term movements, then that I think is more relevant. But from what I've seen of vendors to date, no one's really nailed the signals part of ESG. They're mostly doing screeners, which I think, to your point, are actually less relevant for us.
I think this point is really, honestly, prolific. I think it's a really interesting, what we can't do for the environment, I think anybody in this room or operating in this industry actually has the ability to make some incredible social impact. And I'm forming this opinion as we go, but perhaps you could argue a CFD is an efficient means by which to access liquidity outside of some of the overhead of securities trading, clearing, reporting that exists there, but you have to use that responsibly. So perhaps an interesting way that we can offset our environmental impact as an industry is making sure we utilize over-the-counter trading and CFDs conscientiously and fairly and provide similar best execution standards and allow people who do speculative or shorter term investing to access markets fairly but more efficiently and have a positive impact to them as human beings, but also overall it's actually less CPU usage, less carbon usage to get a CFD cleared to a retail investor than it would be a fractional equity at the end of the day.
Being able to go short as well is something it should be interesting to people, because you can go short a firm that you are unhappy with their practices.
So people witness the industry moving forward. This is why we do these panels, because from here ideas will be born, and next year we will be talking about how this was applied in over-the-counter orders and things like that. I'm sure of it.
Everyone's emailing their marketing person like CFDs are green.
Check these out.
We think
these out.
CFDs might be green.
How can we use AI for this? We mentioned banks in a couple of occasions here and there, and I'm not going to dive into payments and all of this, but because of the regulatory pressure, and this is a bold statement, and you may agree or not, tell me, but it seems that the traditional banks are stepping away from prime brokerage services, and this seems to be a trend mainly because of the regulatory pressure. Is it something that you're also witnessing? Do you agree? I see Gavin nodding, so I'm guessing that you're agreeing with me.
Absolutely agree with you. Yeah, over the last 10 years we've seen it, since the global financial crisis, and then actually since the Euro-Swiss crash. That was right when the Basel requirements were first brought in November 2014. January 2015 was the Swiss National Bank crisis. Suddenly, in the matter of 2 minutes, FX became a much more volatile asset class, and that was what was determining what the banks needed to hold as Tier 1 capital for all of their FX PB relationships. So overnight they had this sudden increase in their capital requirement. They increased our margins, they increased our commissions overnight. It was a scary time, I think, for the market. But the market has survived through that, and in fact, we're talking about existential risk. It's interesting, this bank regulation, the Basel and the US bank regulations, it is an existential risk if they are tightened too much further, because then we could suffer access to our own PBs. And it's an existential risk if they release it, like if, for instance, if Trump comes in and it's a more pro-bank US environment, and they start to go a bit easier on the banks, that could start to threaten the prime of primes as well. So it's sort of two ends of the spectrum that's a bit of a risk. The thing is that, I think, if anything, if history is a judge, like we saw in the 1930s through the 1960s, these bank regulations are going to be with us for a very long time. So this prime opportunity is here and it's growing. And there's space. Alex and I are both in that space. We're the best of friends because the space is big enough. The pie is big enough, and it's something that I think a lot of the other brokers in the industry could be looking into as well, and we welcome it.
I actually see it as an opportunity. Unfortunately, Gavin and I are old enough to remember before prime brokers were actually around, and the futures world of the brokers had direct lines with everybody. Prime brokerage started as an opportunity, and we're going back. So the larger brokers, capitalised brokers, well-regulated brokers that can have access to the banks directly will see this as an opportunity. And Gavin and I talk a lot, and we will become, we'll take up that share of the prime brokers that step away, and it's an opportunity for us in this business to act as that credit annex.
True, I totally agree. I think it's sort of like market consolidation, which well-capitalized, foundation regulated company can get bank access, which imagine there will be less four-way, there will be more three-way, which improve our efficiency as well. Right? And of course, like ATFX, we have a preview, and then we have signed up another one to be more customized to our clients throughout the group. As I mentioned, those clients in Latin America or the Africa, their product-wise is very different with the clients here. So we need a few more PBs to be more comprehensive products to our client globally. So I think like SPB consolidation is good, which totally agree with you guys mentioned, and prime of prime will be a big opportunity as well, and which is good. It's a good thing.
This is a tale as old as time in this market. So we've had this panel and this discussion in an ebb and flowing, capital restrained, cost of capital, balance sheet allocation environment. And I think that the liquidity and credit market feeding the OTC industry it's an organic mechanism, but the market adapts to it. I think we were on a leaders panel in London maybe 2 years ago, and I think the call to action was just reminding the industry that your credit relationships, the balance sheet behind that, where you get liquidity, it's not a marketing thing. There was a period in the industry where everybody wanted to be a PB and take direct bank liquidity. It's not for everybody. It's more challenging. There's other aspects of risk in settling T2 to T0 that a vibrant area of the ecosystem has evolved. And in that last panel, we said, maybe prime liquidity. We see progressive things happening in non-bank market makers, direct liquidity, credit provisioning. I think the message to this room is like it's not a marketing game. It's not a one-size-fits-all, and you should be understanding where you sit in the value chain and taking liquidity and credit appropriately, utilizing that out to your clients, and not looking to reach too far up market in order to achieve something that might not be necessary and or efficient and or safe for your business to operate in.
Or even profitable. We have 3 minutes and 50 seconds left, so I'm going to ask a very, very brief conclusion from each of you because I want to open the floor for a couple of questions. I'm sure the audience is eager to ask at least one or two. Alex, let's start with you. Conclusions, couple of sentences.
Exciting times ahead. Asia Pacific continues to grow, and that's due to probably the regulatory fragmentation. It provides opportunities. I think we're from 4 different countries here, and we all face the same problems, but I think we all see it as opportunities. So I think growth will continue to be in this Asia, in this region.
Thank you, Alex. Joe.
I'm happy to see like different variety of company like happening here, like Finance Magnates, the first time to be here. The market getting more and more popular, which is to provide our clients more options, which is I'm happy to see. And also like institutional-wise, like it's been not many changes like retail, which I think we provide good opportunity for us to be try a little bit more innovative, more different type of scope of products, different level of regulation requirement, which provide a broader chance, a variety of products for our clients. I think I'm pretty optimistic about our industry and the technology upcoming.
Thank you. Andrew?
If you ask my wife, I can't say hello in 3 minutes, let alone a closing statement, but I'll try. We're in a fortunate position in 15 years in this space to be able to wake up in the morning and not react or build stuff necessarily that is missing, but to partner with clients and look at the future of this market. And that's what I wake up every day and think about. And I continue to circle around the shifts that have happened in asset class exposure in this space. This has been a phenomenal year for our client base and people in this room. And it's not because we've seen prolonged sustained FX volatility. It's not because we're all in the crypto space or the new fruit. We saw some great crypto volatility at the start of the year. We saw FX in April, and just recently we're seeing interest rate divergence. And we've cast a wider net as an industry, multi-asset expansion. And I still just think about this space that came out in digital assets overnight. After 15 years of regulation and client support and safety and trying to provide a more comfortable environment for retail speculative investors, and having billions of dollars of disposable wealth go into an industry that's under-regulated. And we ask ourselves every day, why? Why did this happen? How do we equip our clients in this industry with capabilities to attract? I think shares trading, I think 24/7 trading, I think looking at our mobile and app experiences and understanding it's not just FX or brokerage. there's a generational shift in wealth happening, in wealth management, asset management, banking, brokerage across the board, and being a safe harbor, a well-regulated place that clients can go and take this energy, and meeting them where they want to be is what we're looking to partner with clients on. And I welcome feedback constantly from our customers there, and that's, I think, a really key part of the next few years in this industry.
Thank you. Gavin?
I'll be quick. New products are what I'm looking forward to most importantly. Like I said, the pairs products I think are going to be an absolute sensation. They've already taken off in Japan, and I think the rest of the world will start to see the benefits of those, especially as we go through profit seasons and some of the things start to move around. I think in terms of lessons or what we should be looking towards, echoing a bit what Andrew just said, I think what we want to do is make sure that we're a good actor in this industry and try and promote that sort of a culture. I think everyone on this panel does that very well, and I think that we need to take responsibility for that. I'll leave it there.
Thank you, Gavin. David?
We're out of time, but I'll be super quick. Just innovation is what I'm interested in. Like, I feel like a little bit cheeky thing to say, but I don't think trading has changed in probably the last 20 years, really fundamentally. And sometimes I feel like we're following the pattern and we change things around the edges, but we're not fundamentally changing what trading is about. But when you look at things like crypto that have been relatively unregulated and what they've done with it, if we can get that right, like, I'm not saying the answer is no regulation, because we want safety and we want retail investors to be protected, but at the same time, we also need to innovate. Like, we need to really push the throttle on what we can do with the tech, because it's happening in other industries, and we're either going to participate or we're going to be left behind.
I agree. Thank you all for your final thoughts. Any one question from the audience? We have time for one. No?
Thank you. Because nobody's asking, so because this is a leaders panel, I want to ask a question, probably not quite popular, right, from the staff or employees. So what is your view for flexible working arrangement? I think during the COVID, before COVID, this is a very hot topic. People talk about, oh, employer has been kind and offered this opportunity. People enjoy it. And what is the atmosphere now? I'll probably start with Andrea, because the tech company normally is very, very pro to this kind of arrangement.
So the question is, how many days a week does Andrea Ralich go into the office in America? It's a great question, a really interesting topic that transcends our industry. I think we're culturally always looking to be flexible and provide the right environment. We're conscientious that you can't say, oh, you can work remote if you want to, because there's IT people, there are an office manager, there are people whose job is essential to the office. I think the thing I often say at oneZero is social capital, your interaction with people in the company being more than an email or a Slack ID is critical, but there's no KPI, there's no thermometer I can put on your forehead and say, oh, your social capital is good. You empower your employees to say, we're going to equip you with a culture and environment that, do you need to be in the office from 9 to 5 days a week to build social capital and be known and present? Probably not. I don't want that with the developers, as they get distracted by the creative designer that wants to come over.
Pretty sure they would want you there that time.
But it's a balance. You can't be unpresent. And I think my leadership and management style is openness, transparency, vulnerability, and I think that speaks well to a new generation. Gen Z, very interesting management, can come across as entitled. I often look at that, and if you meet that entitlement with empowerment and say you have a challenge of you want to be trained more, you want to learn more, people aren't in the office, you want flexibility, equip them, and many times you'll see that generation, though entitled and opinionated, is also action oriented, and so the combination of just saying, we don't know. There's many books, Drucker, you can read on management. There's systems like OKRs and other platforms, but there isn't like a playbook to how you bring your modern technology back from a pandemic. We're doing it live as we go here, and just vulnerability and openness is the way that we approach that.
I mean, just we're a team of roughly 250 engineers, and we're in 6 countries. So the idea that we're bringing everyone to an office is just is never going to happen. So it needs nuance. I think that it's just fundamentally poor thinking if you think that I'm going to get people in the office and that's going to solve my problems on collaboration. Like, actually what you need to do is look at what is the type of person, what do they need to be successful, how do they fit into the team, how do I measure velocity? I mean, there's a whole heap of thinking out there in terms of measuring engineer velocity. It's not a simple topic, and you can't solve it by saying, let's get everyone into a physical location and problem solved. Like, I actually feel like if my engineers are sitting in the office gas bagging all day and having people parked at their desk, they're not engineering. You know? So, you know, I'd rather they spent their time on what they were actually supposed to be doing.
I'm more traditional, to be honest. I like people engagement. Not only within the offices, colleagues to colleagues. If I can meet to talk to you, I don't call you. You know, if I can call you, I don't email you. It's like, that's why I like, for ATFX, we hope our colleagues can be in the office, sit next to each other, talk to each other, share idea, brainstorming. It's also same theory, same philosophy applied to our clients. That's the reason why we're probably one of the most, like, the FX company have the most offices globally. We have 23 countries with offices, local team, empowering them, meet the clients, meet the IB. I mean, I like personal touch. Like today, if we do it on Zoom, I mean, it's very different. So I take a more traditional view, no matter within the company, outside the company, even we are in online technology trading company, but still like person touch, talk, share, have fun together is very, very important, especially we are on a digital, a lot of digital things era, right?
Way, I think you got your answer. You're in the office 5 days a week, mate.
Need to clock in. You know.
I think it's everybody's different, right? And there's so many different roles within our business, from engineering to compliance to people who have to be face to face, and that's the sales role. And I know, and liquidity, sales and liquidity need to be, you know, side by side and collaborate and a lot of talking. So for us, you know, in Asia, Singapore, which is our biggest office, you know, we're four days a week. But if somebody needs that little time to go to the dentist or something like that, I don't think anything's changed there. We allow our people that opportunity to look after themselves, be with families. And I think is that part of ESG? I don't know. But that's caring for your staff, and you know, that's our main thing.
I think very briefly in just one sentence, because Dushka is going to kill me. But Finance Magnates, we have our team, we have a team in Cyprus, and then everybody else is across the globe. Like, we have people all the way from Canada to the States to all the way here in Australia, that we have one of our editors in Melbourne. So COVID was not new to us in terms of how to work with people remotely, because this is our life. What we have always tried to do is when we recruit, we make sure that the person, our HR makes sure that the person that we're recruiting fits within the culture and the personality of the company in terms of working ethics and the personality that it fits within the teams that they're going to have to work with. So we trust our teams, we give them a level of trust, and if they betray that trust, then that's a different story, and there are consequences to that. But we don't assume that because somebody's not on-site physically in an office, they're not doing their job. So remote working is something that can work. For some people, it works better. I prefer to work from the office. I can focus more. But some other people prefer to come, you know, only 2 days a week, 3 days a week. I mean, it depends. So we have flexible arrangements. That's from us. Gavin, you're the last one. And we'll wrap it up, I promise.
Well, we've solved the problem a little bit differently. We've got 2/3 of our staff are under 28, so and they're all extremely smart. We've gone for extremely smart people, brought them on as interns and brought them through that way. They all want to come into the office, but they don't want an office experience. They don't want the traditional banking stuffiness and the low ceilings and that sort of thing. So in order to keep them happy and to get them back into the office after, you know, the COVID breaks and all that sort of thing, we've basically, we've got a 2-story office, and we've made the bottom story a multi-sport entertainment complex. And you know, people have different views about it. It's working extremely well for us. The morale in the company and in the office itself is fantastic. We've got an indoor cricket pitch in the middle of the office. We've got a basketball court. We've got simulated golf, everything. It's just
You're
amazing.
setting up the bar too high, Gavin.
I've seen golf simulator before. I've seen basketball. I've seen ping pong. This is the first cricket pitch in an office. I think you've really innovated
Sounds
there. I'd like to
dangerous.
see it in action.
Well,
really.
our COO is Nabil Rahman from Pakistan, so he was going to make sure there's a cricket pitch in there. That's what we've done. It's working well.
Okay, thank you so much. We don't have time for any more questions, but you can stick around and ask them anything as they step off the stage. Big round of applause for all of our speakers, and thank you for joining us.